Please make sure my volume's good. What's up, everybody? Nice to be here with you on the beginning of March Madness. Hope you're well. Do me a favor, and I know the chats are always a little bit slow. Chat in, say what's up. I see a bunch of you already did, which I appreciate. That always makes me feel good. And then we'll go from there. Okay. And then again, disclaimers that trading is not appropriate for everyone. All right. I have some slides just so I don't get sidetracked, but I'm also an open book. I think that's like what people really appreciate. So if you have any questions about anything, please let me know. Okay. All right. Thank you. All right. So quick little history about me for anyone getting to know me for the first time. Just give me 1 second. 1 second. All right. Sorry. Now the sound is very good. So I have been trading. I made 100 trades today already. I've been trading since like 1998. I was a day trader for over 10 years. Then I got into financial publishing, providing trade ideas and information. And it's been a really fun ride to get me to where I am, but I've never been happier in terms of what I'm doing. And I'm excited to show it to you. So when I was trading early on, I had a lot of success. A gentleman by the name of Nelson Schwartz came to our firm and he stood behind my desk and he watched me trade. And he did a whole article in Fortune magazine where I made $20,000 in a couple minutes. That led to a lot of exposure. And while I was trading, and this is just my journey, like I'm just telling you because it's pretty funny how it got here. While I was trading, there was like a time when the market was a little bit quiet, and I got invited to do a reality television show, which ended up getting viewed by 30 million people in the finale on NBC. And when I did the show, at the end, they found out I was a really successful trader, and they said it was on after Friends. And so all these people wrote in asking for help in the stock market. I ended up on the Tonight Show. And that's when I realized that there was such a calling. I had like literally thousands of people write in. So I started to help individuals learn how to trade for themselves. That's what I do. So if you're here, it's because you're an individual who wants to learn to trade for themselves and also get good trade ideas. Okay? That's my history. One more thing. So, and I think this is important for you to know too. So I owned the Adam Mesh Trading Group from 2006 to 2021. In 2021, I sold it to a company called Tiffin that was focusing on fintech, AI, exciting stuff. And it went, I thought that was going to be the end of my journey. But what happened was I do a lot of options trading, and Tiffin and Magnify, their platform, weren't focused on options trading. So they wanted to meet our investors and get to know them. But they realized that they didn't need the option services. So they said, want to do a deal, you could get them back. So last year I got my services back, which was interesting because I didn't have them for 4 years. I was running them for 4 years, but it wasn't mine. And I think it's pretty rare where like, I don't want to equate myself to like how amazing it would be to be a manager of a sports team, but like, let's say you were like a coach. Let's say you were the Giants GM, Joe Schoen, who just let Saquon Barkley go. And, I'm not saying I'm not bad like him, but let's say you made a bunch of mistakes and then you had 4 years off and you could come back and have the same job. Imagine how many ideas you would have about how differently you would want to do things. And that was kind of where I came in for my second act, is that in starting the company again, what I really wanted to do was make sure that I'm always making the exact trade I want to make. So in years past, we started one service, then another. So if you were in a credit spread service, you only got credit spreads. If you were in diagonals, you only got diagonals. Whatever the service was, just straight calls or puts, that's what we do. And I said, if I'm doing it again, I want to be able to make whatever trade I want at any point. That was very, very important to me. And so I took all my services, I combined them into one. It was called Mesh Prime. I've been doing that. It hasn't even been a year, but it's been unbelievable. And we just survived a really good test because the market went back by like 13%. And we've been doing fine. Our group is completely comfortable and happy. The best example I have is we bought Uber at the highs of the market. And market came off 13%. And the way we traded it, we're down not even $100. So the way we manage risk and take control of trades has been really good. Okay. All right. So my go-to trade to get started is a credit spread trade. And the reason why I like a credit spread trade is because it's a very high probability of success, and it allows you to come and take advantage of things like after they've gone up a little bit, like things you might have missed, like Uber. Today, like Uber, maybe we liked it at 70, 72. Now it's 74. If we don't want to chase it at 74, we could go and put on a credit spread in that type of trade. And when I first started credit spreads, I had on the first 17 trades I did, and I don't know why I wanted to give it a chance, and I committed to doing 17 trades, and I collected 100% premium on all of those trades, which was made me a big fan. The reason why I love credit spread trades is because there's a premium collection component, and when you collect premium, you become the house, and the house wins. All right. How's the pace and everything? You guys following along? I love audience feedback. The reason I do this is for audience feedback. So make sure you're involved. It's so much better that way. Okay. After I did credit spreads, I moved on to diagonal calendars. Why? Because credit spreads, and let me just flip to my screen to I'm going to go to my trading screen real quick. Yeah. You guys see my trading screen okay? The last comment I see is Lori is saying the best I can. I know it's a little slow. Patrick, can they see my screen okay now? Yeah, okay, cool. Thank you. So let's take a look at Uber. Here's Uber. It's up $1.53 today. I came in with calls. I sold them. I'm up like $1,400 in Uber today. But let's say I want to trade it again, but I'm like, I don't want to buy it up here. Market turned negative. Just a little bit iffy. So what I could do is say, all right, I'm going to go out to April 17th. Okay. And I'm going to sell the 72.50 put. And I'm also going, and that's like the 37 delta. So the expected move is $5. I'm going $2 wide, but I'm collecting $2, and I could buy the 67.50. Now, the reason I buy the 67.50 is it is an insurance policy. So what this says is I'm risking 373 to make 128, or 372 to make 128. Okay. Okay. So here we go. Let's see. If you do 129, now it's 129 divided by 371. So you're making 34% on your money. Okay. 34% on your money in a couple of weeks, which is fantastic. Now, what's the chances you will do that? Well, it's right here, 72%. Okay. So there's a 72% chance of profit, and you can make 34% on your money. And as long as Uber goes up, stays where it is, or doesn't go down below 72.50, you're good. That is a credit spread. That's a bull put credit spread. Now, if we wanted the other side of this trade, which would be if we thought Uber wouldn't go up that much more, we could sell the 77.50 call, buy the 80, and that's a bear call spread. Okay. Or if we wanted to do the box, we could sell the put, buy the put. We could sell the call, buy the call. And now look at this. We're risking $93 to make 157. And if we did 10 contracts, we're risking $950 to make 1550. And we just want Uber to be between 72.50 and 77.50. So if you think it's going to be a period of consolidation, well, now this gets very interesting, right? You with me? David said, slow down, please. Don't worry. The nice thing is, David, I try to give you a sample of what we do here, but every week I come on and we show how we do the trades and we spell it out for you and make it easy. So I love that you're saying slow down. I love that you're into this. There's a lot of people that know how to do this already. So I'm trying to balance the two. Okay. But do you see over here in the box, the bottom with the trades and the $1.57, and over here is the max loss, max profit, probability? Because the nice thing is you could see it all in the box. Okay. So that's a credit spread. Oh, you're on Robinhood. Okay, yeah, I'm on Tasty. So you'll get used to it, but as long as you understand the basic concepts, you'll definitely get used to it as we go. So now I'm going to go to back to here. So we're going to talk about the diagonal calendar. So the things people liked about the credit spread trade were high probability of success, good return on your money, just an easy trade to do with limited risk. What they asked me once they experienced that was, can we now do something that's a little bit less time sensitive and you can have capital appreciation? So what we started to do was a diagonal calendar where we'll buy a long dated call and then we'll sell weekly calls against it. And that's what we did in Uber that allowed us to be successful, is we bought a long dated call and sold calls against it. So even though Uber went down a little bit as the market corrected 13%, we had sold the call, so we were making money on that premium that we sold. All right. Vice versa, if you thought the market was going to go down, you could buy a put and then sell puts underneath it. Yeah, I use Tasty Trade. And Patrick, if you want to send out a link for Tasty Trade, if anyone's interested, it's a great options trading platform. I'm a proud brand ambassador of them. Okay. Okay. So that's a diagonal calendar. And the best thing about a diagonal calendar, as it says here, the street had said it was their favorite strategy, is that if you collect enough premium, you could be in a trade where your cost basis is less than zero. So right now in Mesh Prime, which is one service we do, we actually own some positions where our cost basis is less than zero. We've done it for the group. How cool is that, by the way? So we own Qubits, the quantum stock. We own Qubits, and even if it went to zero, we'd still be profitable on the trade. We're in a stock called an ETF called WiMAX, where WiMAX has gone. WiMAX has gone down 5 points since we've been in it. Remember, the market went down 13%. It's aggressive tech play. But because of the fact that we collected premium and dividends, we're up. We're up on it, even though the stock's down $5. So we've become really good at building equity in our positions. It's like an apartment we own and we're collecting rent, and the rent is more than the cost of the apartment to maintain the apartment. So our risk on the apartment is going down every week. So with this strategy, we are the landlords of the options market. Let me just show you on my screen an example of this trade. Okay. And then I go to share screen, window here. Okay. So we have this trade on an Uber. So we bought the December 75 calls, and then we sold already. This is the second time, the 85 calls against it. So that's an example of that kind of trade. So let's show you another one. Amazon, maybe. Amazon's come down below 200. Maybe we think it's going to go back to 220, but not for a while. So we could put on the June 195 calls. And that would be, it's a little expensive. I don't know if we do this trade. This is more expensive than the ones we normally do. I don't want to scare anyone. Let me show you a different one. Let's go Palantir. Let's say we think Palantir is going back to 100 by May 2nd. So we could buy the 88 call for $8. We'd be risking $800. But then what we're going to do is we're going to sell the weeklies against it based on the expected move. So we'll go here. We'll sell the 92 calls for March 28th. And remember, we bought the May 2nd 88 calls. So now we're bringing our risk down from 8 or 9 to 6. And if this goes up, stays the same, or goes down a little bit, we're making money. But here's the best part, and I'll show you this in a second. That $2 we collect, right? We collect it once, twice, 3 times, 4 times, 5 times, 6 times. 6 times 2 is 12. So it costs us $8 for the long call, but if we could average $2 a week in premium collection, even if the long call goes to 0, we'll still make 4 points on that. All right, and I'll show you this math spread out so you could really appreciate it because it's cool to see. All right. Okay. So now I'm going to stop share, present. All right. So let me show you that again. So this diagonal calendar is made up of one long option and one short option with different months and different strikes. It's put on for debit. It benefits from time passing. It benefits from increasing volatility. It's a defined risk trade, and profit is realized on closing the trade. Okay. What the diagonal is doing is it's creating a synthetic covered call, allowing us to collect premium while financing our trade. And with the diagonal using weekly options, you have the flexibility of moving the short strike every week, giving you the benefit of always collecting the largest amount of premium. Diagonal trades are directional. You are picking a direction in any stock or market, bullish, bearish, it doesn't matter. You can make any trade in any direction. Okay? Diagonal trades bring the best of both worlds, the ability to be an options writer, collecting premium on a weekly basis, and have the same opportunity for unlimited upside. Okay. Okay. All right. I love this strategy. So what I love about a diagonal is it gets you confidence because you are in a trade where the amount you're risking goes down every week because you're collecting that premium. Okay. You're disciplined. You're not going to panic and get out of that trade because you know that your risk is going down every week. And because there's a premium collection component, you get paid every week. Okay. All right. So if you're long a call, you're going to sell a weekly call above it. If you're long a put, you're going to sell a weekly put below it. And we're going to focus on weekly income collection. All right. So now let's take an example so you can see it. And I have this one just as a stock example. Like I went in my screen and just showed you now how to do it. But I like also being able to bring up slides. So let's take a look at MU. MU was trading at 41.69. If we want to buy 100 shares of MU, it would cost $4,000 over. But if we want to buy a $40 strike, it will cost us just $435 for the right to own it at 40 for 64 days. We're paying for that right. But look how cool this is. All right. And Jim, I'm going to answer your question a little bit later about which stocks we choose and how. But if you're long a call, you are going to sell the 42.50 above it. So you're long the 40, you're going to sell the 42.50 for 70 cents. Here's the math. This is what's unbelievable. So our long call costs $6.30, right? Okay. Sorry, a long call costs $4.35, $435. You guys with me? And if we're going to sell a short call above it for 70 cents times 9 weeks, that's $6.30 premium collected. If we can average 70 cents a week. Okay. So 70 cents a week times 9 weeks equals 630. 630 times 100 equals $6.30. So if our long call, which we cost us $435, went to zero, we're still making 44.8% on our money. Do you guys follow me there? I'm going to give you a second to chat in and make sure that you're able to follow me because I want you to be able to follow me. Okay. All right, good. I love it. Yeah, so you need level 3. Listen, everything's a means to an end. If you're interested in this strategy and it makes sense and you want to be able to trade, I don't know why in a retirement account or whatever they won't let you have level 3 trades, but they're doing you a disservice. They're truly, truly doing you a disservice. You want to be able to use premium collection. It's a professional way to trade. It gives you an advantage. I don't understand why they wouldn't let you collect premium in trades. No, and any like ask Tom Sosnoff, he's like my guy for all these things, and he doesn't understand it either. Like it makes no sense to either of us. Okay. All right. So here's another one. Let's say we want to buy this stock for at 22 for $1.71, the call, and we're going out 74 days. Okay. Well, we could sell the weekly against it for 36 cents. 36 cents times 11. If we can average 36 cents a week, it's $3.96, which costs $1,007. Our cost is $1,710. We're making $3,960. You're making 131% return on your money. So if you could just average good weekly premium collection, you're killing it. Casey, I don't think they allow level 3 in your retirement. I think it's a rule that you can't do level 3 in your retirement accounts. But it shouldn't be. And you should just open a non-retirement account if you're interested in this. Okay. I was on Fox when they opened the Bitcoin futures for the first time. So a lot of people ask me about Bitcoin also. It's a relevant topic. We have an amazing trade on covering Bitcoin right now. How many of you are interested in Bitcoin? Like, I don't know how many have Coinbase accounts, but how many are interested, follow it? How many of you think it's going to be between 60,000 and 110,000 for the next couple of years? Just curious. Wait for that to come in. By the way, Patrick, JJ, whoever is helping me run this on here today, I love the participation on this event right now. Unbelievable. Really happy. So many people, different people chatting in, which makes me really happy. So here's what we have in Bitcoin. Rather than, opening, we're not becoming like a Bitcoin trading service. We're going to teach people how to trade Bitcoin. So what we do is we trade BITO, B-I-T-O, which is currently trading around $18, and it pays $1, anywhere from 80 cents to over $1 dividend once a month. And then we also sold calls above it against it. So we're aggressively collecting premium. And at $18, all we have to do is have 18 premium collections, and we own it at a zero cost basis. So we just need Bitcoin to stay alive for a couple of years, and we're going to own this trade literally at zero cost basis, which is the best way to own a trade. Okay? We'd also done options in Riot, and that's the thing. With Mesh Prime, we can do whatever we want. We could buy calls. We could put on credit spreads. We could do diagonal calendars. We're always going to put on whatever we think the best trade is, which has allowed us to benefit in a market that's down 13%. Okay? In this example, we just bought calls. Riot, sold them. This was a good trade. Okay. So where are we now? Where are we now is I have one service that I do for everybody, which is Mesh Prime. So I have no conflicts, no different agendas. Literally, with me, it is just set up where we come on a couple times a week. I'm actually 3 times a week right now. On Tuesday, I go live with Christian Thorpe. We do a market breakdown, and we talk about how the market's looking for the week. If there's Fed announcements, whatever it is, we're discussing it. If you can't make it live, it's recorded. On Wednesdays, I sit down with Mike Camo from T3, and we do just like a fireside chat. And on Thursdays, which is today, we update our positions. And that's where, like, who was it earlier? David was asking. That's where we go slow and we say, okay, this is what we're going to trade and why. And another question, there's a lot of good questions in here, but one other one I saw was Jim said, how do you determine what stocks to trade? So Jim, when we're deciding which stocks, the options have to have volumes. And for a lot of what you're seeing with these trades is they have to have weekly volume. So we could collect premium on a weekly basis. So the volume is the biggest criteria. They have to have volume. You have to have weekly options. The options have to be liquid so we could get in and out. And that's our criteria. So we can't really trade those no-name stocks that don't do enough volume. And by the way, I'll show you why in a little bit, because on my own, anything stupid I do for myself, not for the group, right? So I traded one of those stocks that doesn't have a lot of volume, and it gapped out to a 50-cent spread, and now I'm stuck in it. So that's why we don't do that, okay? But yeah, everything we do is volume. You can get in and out. It's really comfortable. We're running a great portfolio. Market's down 13%. We're in great shape, and we continue to finance our trades so that we have very little risk. Our risk goes down every week, and we're in a really good position to attack this market right now. And so every once in a while, I haven't done this for, by the way, these are for like anyone that David or anyone else that was worried about like, oh, how hard is it to follow? Look at these instructions. We give you the stock, the price it's trading at, the stock symbol, what our position is right now, what our action is, and you could even get a screenshot if you need be of exactly what we're doing so you could follow along, and it goes much slower there. So every trade, entry and exit, we spell these trades out, okay? I don't know if we do screenshots anymore because of the tech we use, but if you needed a screenshot, then we could always do it, okay? Traded Palantir. We're in a lot of the popular names, Uber. So we put this trade on when the market was literally at its highs. Markets come down 13%, and we're completely fine in this trade because of the way we collected premium, which is great. Oh yeah, so we've collected premium a couple times. So we've already paid down the option. So if it costs $14, our risk is down to 11, and we still have March, April, May, June, July, August, September, October, like 10 months. So yeah, as I said, very, very good position in our trades. Okay. So what I'd love to do now, and we got a great group, and it's March Madness, so we're doing something really fun that you don't see often. I want to have everyone join who's not in for March Madness. So we have a really cool deal. Any service I had in the past before I sold the company and got it back, we had Mesh Private Portfolio, which was covered calls. We had Phoenix, which was calls and puts. We had Options Money Machine, which was credit spreads. We had Mesh Delta 30, which is diagonal calendars. It's called Mesh Delta 30 because the optimal time to trade at is the 30 Delta. Okay. We now have these live rooms. We do text messages, weekly options trading. And here's the March Madness. You guys want a March Madness special? You want me to show you a March Madness special? Give me a yes if you want me to do something special for March Madness, because these services would have cost, I don't know, like $4,000. But as I said, I've never been happier. I had already sold my company. I have fun. We have a great team, but I make it easy for you to get in. So everyone give me a big yes if you want me to give you a really cool March Madness deal right now. All right. Thank you. I appreciate it. All right, here we go. Let's see what we got for you. Nope, it's not this. This is what it's supposed to be. Here's what we got. $467 is the March Madness special. AdamMeshLive.com/Mesh Prime. You get access to everything. And this is for 6 months. And then at the end of 6 months, this is the price it renews at. Your price never goes up. Okay, so $467 for 180 days, 6 months. Is that right? Yeah, around 180 days. And then you get locked in at this price, because if you sign up for a March Madness special, you get to keep the March Madness special. So it's AdamMeshLive.com/Mesh Prime. And that's it. We've built a nice audience. We continue to invite people in, and we're going to have a great group that's going to grow for a long time to come. And David, yes, I will make it easy to follow for you, sir. Well, have fun. And Patrick's on this call with me. Patrick's history is amazing. Patrick's history is amazing. He was a bartender. And when I met him, he was looking to switch careers, and he has such a great disposition. He came in and learned how to trade. He loves video games, and something about that combination of having been a bartender makes him very patient and gets along, and like literally everybody loves him that he speaks to, which is unbelievable. And he likes trading because he likes video games, and he's able to answer questions clearly and explain it. So that's a great asset we have, is Patrick, who's able to help you with everything. MI said I need to get to level 3 first. Honestly, like I just joined a golf lab for the year, and I didn't join last year because I didn't think I was going to go. But then I realized it was a self-fulfilling prophecy. I didn't go because I didn't join. So now I join to make sure that I show up and go because it's something I want to practice. So if this is something you want to do, what you should do is join so that you know you have to get started with level 3 and you push yourself, because it is a big plus for anyone who's trading options. Yes, you will receive a text message if you're in Canada, Claude, I believe. Yeah. No, you could start at level 3. You just have to sign up and say that you're comfortable trading spreads. And Patrick just posted his phone number if anyone needs anything, which is great. So yeah, we do have text messages in Canada for Claude. David, I think you're gonna love it. You got the combination you want, and so everyone go sign up now at that link, adameshlive.com/meshprep. This is our March Madness special, and then we'll welcome you in. I'll wait for you guys to join. And then we'll go from there. And there's a phone number if anyone needs something. No, you could start at level 3. You go on and you tell them that you're comfortable with spreads. And if you have any, it's easy to do. You just have to say you want to do it, which I think you do. Okay. Let's see. All right. Sounds cool. When I start trading. Who's signing up? Let me know, by the way. I like to see. And then we look out for you. This is a really good March Madness deal, 467, by the way. And we have a nice group, so always getting good ideas. It's going to be good. Okay. AdamishLive.com. Come on, say hello now. Yeah, David, sounds good. Tiago, what's your average risk to reward on your trades? Basically, we'd like to know if any of your losses exceeded a few winners. No, actually. Our biggest winners are well above our biggest losses. Let me just bring that up real quick. So we trade small size so everyone can follow along, and anyone who wants to do bigger can do bigger. But yeah, we have like, it's actually a little bit down now because the market's been down. So our win rate went from like 80 to like, tell you what it is. It's currently like 65% right now. I think it's going to go back up though, because like some things are teetering uneven and they're leaning down. So it could easily be back at 75 by tomorrow. And yeah, I'll tell you here. Here, this is. Let me see if I'm able to do this. Present, share video. Cancel. I don't know if I could share screen window. Let me see if I can do this. Can you see this screen right now? Or no? I think Patrick might have to make it available. Okay, so it shows the equity curve, which is pretty very consistent. Yeah, so the win rates look good. I'll stop showing that. Here. All right. Any questions about the market or anything else right now? All right. Well, thank you for the participation. If you have any questions, you can call the number on the screen, which is here. What am I sharing now? Am I sharing this? There we go. There you go. AdamMeshLive.com/Mesh Prime. There's the phone number. Okay, do you have any questions? Thanks. Yeah, or you can email Josh at AdamMesh.com or call 212-774-5971. But if you like trading, I mean, this is a great group. If you like options trading for ideas, strategy, everything else. How so, Yolanda? Please explain more. All right. Thanks, everyone. Be good. So, Lori, the weekly webinars we do are for members. The weekly webinars we do are for all our members. These we do maybe once a month to let new members in. We're just looking for a few good people to join the rest of our group. All right. From when? I don't know. If that was like years ago, the Tiger shirt, I don't know. I don't know if we have those anymore. I don't know what happened with that. All right. Thanks. I think you'll like this though. All right. Be good, everyone. Thank you.